Hey guys, welcome back to the Independent Investor channel. This is going to be a quick 5-minute response to one of my subscribers who hit me up with a question asking me how you go about self-managing your retirement account. Guys, if this is your first time tuning into the channel, hit the subscribe button for me to support the channel. This was a really important question that I would really like to separate the gray matter for you guys. You guys have to understand, if you've been with me for quite some time, when I talk about a self-directed account, it doesn't mean that you have to go in there and monitor or tool that account. I find that a lot of people are deficient in identifying their budget, eliminating credit, and getting the right account started, all right? So those preliminary things, I've done videos on all of those preliminary steps, but if you're knocking on the door and you have the account started and you're looking to get those funds in there, guys, I have built tools to identify your investing capital, whether it be $1,000, $5,000, $10,000, $25,000, $50,000, $100,000, $250,000, $500,000, and $1 million. Pick the bracket that you're in and identify what risk tolerance level you are at. Once you have those two items, you need to set up a financial goal for yourself to understand where you want that money to end up in the future, all right? Now, once you've identified those three criteria, all right, you need to identify what type of portfolio you want to build. If you have not joined my Facebook group, guys, you are missing out. There is discussion going on in there with my plank owners, basically the members of the group who have been with me since the beginning, and they know exactly how to respond to your needs. They know how to respond. Sometimes there's a little bit of getting off track. If you feel like your answer is not satisfactory, hit me up with it, okay? Because I am not one of those guys that advocates for timing the market. We do not do that. We identify in our budget what out of every dollar that we make, we want to put in the stock market, and we want to keep those dollars invested in the stock market. We can't decide to take a dollar and put it into the stock market only to get a 15% correction and then decide that we don't want to have those invested dollars invested. We want to have those somehow on the sideline for a better day. It doesn't work that way, guys. It just doesn't work that way. We teach on the Independent Investor channel with regard to fundamental investing principles, what has historically worked over the long term, all right? And quite frankly, the only thing that's worked in the stock market historically has been long-term passive investing, all right? So when you are looking to take that $1,000 or you're looking to take that $5,000 or $10,000, I have broken it down in the simplest of terms. Either you have a 50-50 portfolio, all right? We don't talk bonds on this particular channel because the majority of my viewing audience is from 20 years old all the way up until 60 years old, all right? Now, depending on who you are, a bond allocation may be appropriate for you, but I contend that stock market investing isn't as scary as everybody else will make it out to be, guys, all right? So a 50-50 balanced blend, or you have 100% passive portfolio where you're putting index funds to work or you're putting ETFs to work. If you're below $10,000, I recommend going with the ETF fund because they buy like stocks. They're easier to enter and exit, all right? When we're looking to build that portfolio, if you're interested in some single stock allocation, you can go 75% toward a passive blend and 25% into a stock portfolio. Conversely, if you're more interested in taking an aggressive posture and entering into 75% stocks in your portfolio, you can do that and leaving the remaining 25% in a passive investment vehicle. Now, all of these job aids are listed on my Facebook page. I am going to be throttling down the responses to folks asking me how to build out a portfolio because I work super, super hard with these job aids located within the Facebook group that you can go into and build out your portfolios for yourself, guys. The essence and the root of that question I get asked all the time, and it requires some level of self-assessment. Again, risk tolerance. how much working capital you have to invest with, and your investment goals going forward. Once you answer those three, now that's after you've got the account started, answer those three for yourself and then pull your card. Pull your investment card. Look at how I've broken down each individual of your investment options to go ahead and build out what type of portfolio you want for yourself. A lot of people come to me and they say, Ryan, I've got $6,000. How do I invest it? I don't know. I don't know. I'm going to come back to you and ask you those three preliminary questions, and hopefully you can start the evolution of empowering yourself to do a self-evaluation to get yourself into a portfolio that's going to work for you. The answer to my subscribers' question with regard to how you manage a portfolio for yourself, you don't need to. You put these good passive assets in place and you let them ride until your goals are met. Guys, thank you so much for tuning into this quick shot financial 5 minutes on the stock market and addressing one particular question, asking me, how do you go about self-directing in a self-managed account? All right, guys, it's somewhat misleading a little bit, but if you guys get this account built up, it's really going to be put on autopilot for yourself, and then you can go on working the rest of your life doing other things, taking care of your kids, exercising, doing all the stuff that's important. You do not need to be tooling with your portfolio 24 hours a day, 7 days a week, and more often than not, that tooling can cause a lot of damage. If this is your first time tuning in, guys, and you want to share the message out there with anybody that needs this message, that's looking to get involved in the stock market, share the message. Leave your comments at the bottom of the video to support, guys. Thank you so much for tuning in, and good luck in your investment future.